everybody. It's your girl, Jacqueline Chantel.
And I'm Shay, and you're watching Elevated State.
So, Shay, what did you make?
So, you know how, like, you be having a taste for something, but you may not have all the ingredients in your house, but then you too lazy to go to the store?
Yeah.
So that was me. So I had a taste for strawberry cheesecake. But I didn't have no pie crust. I didn't have no the graham cracker pie crust, and it was cold. So I'm like, I'm not about to go to the store and get any. But I was like, what do I got? So I'm like, I got these sugar cookies. Now this could already be a thing. I don't know. But anyways, so I baked some sugar cookies. So these are the sugar cookies. I got different types of cookies on here for us to enjoy. So I baked some sugar cookies. Then I put the cream cheese on top of it, and then I put strawberry syrup on top of it. So I made it on Saturday, and everybody's like, they good. So I'm like, oh, I'm gonna make them for Jackie. So now you gotta try it. You could be honest, like, okay. You know, like, you like, that ain't what it is. I think they good, but
I love sweet stuff anyway. So like,
I don't know. I like cream cheese.
Oh.
Okay. Do you like it?
Yeah.
So now, see, there you go. Whenever you have a taste.
Good.
Sugar cookie, then cream cheese, and then whatever type of syrup. I like strawberry, you like cherry. Look at me being greedy. I'm about to get this little piece. And
This is really good. It's really good. Yeah.
Our topic for today is credit.
Yes.
Specifically, like best starter credit cards, kind of the best way to start building up your credit when you're trying to, like, you know, get your credit to a higher credit score. So for me, I would say, well, I guess first we should probably start like with why
listen to us.
Yeah, why should you listen to me? So,
I guess I can go with that. Start off with that.
Okay.
I do go to college at the moment, and I actually already have my associates where it's a concentration on accounting. And then I've also worked in basically in the financial world for a total of 7 years.
For me, I would just say from trial and error, personal experience. Like, I went to school, my minor was accounting. They didn't teach me.
It did.
So like when I got into college, and you know, it's just that I don't remember being taught that in high school, and I don't remember like my parents really teaching me that. So when I got into college or whatever, and I feel like as soon as you get into college or whatever, like all these credit cards like start coming, apply for this, student credit card, And me not really knowing how to manage my money or whatever, I just started like taking out credit cards for anything. Like, yep, I'm gonna get this credit card or whatever.
All of them.
And I just started like spending the credit card and not paying my credit card back. And the next thing you know, and just not understanding that you need credit to get this or whatever.
You have a 750, 800 credit score. You can literally walk into a bank and your signature can get you a $10,000 loan. Just your signature alone. Your credit score, this person always pay this stuff back. Sign off. So like your credit is so important. So I pretty much did the same thing when I first started off. The first thing that was on my credit was a car. I ended up getting a car, and then my mom co-signed on my car. And then, like, in a matter of 6 months, my credit score went up. And then I got all these offers in the mail to apply for credit cards. And I applied for, like, 5 credit cards in, like, 1 week. And they was giving me stupid limits, y'all. I was, like, 20. No, I was, like, 19. And they was giving me stupid credit limits. And I applied for all these credit cards, like 5 credit cards in 1 week. Got all these stupid limits. Was using them. Didn't really know how to like function off of them or like how to pay them back on time and just how to manage. And like within like another 6 months, I learned my lesson. Like I was like, I'm not doing this again. And then I learned, you know, little tricks and tips on, you know, how to manage my finances and also manage my credit cards as well. So for some starter credit cards that I would suggest would be Capital One. Capital One, for some reason, approves any and everyone. Especially if you're starting off, they're going to give you a limit of at least $300. Like, when you get that credit card, I always tell people, do not spend over that 30% limit. Once you go over that, it starts to look a little funny according to your credit because you're going over a certain percentage of your credit that you should be using. So that's one tip that I would say. What would be some more tips that you would say?
So for me, it was a few things. So like after like a couple of years of like, damn, my credit sucked.
This chocolate chip?
That's chocolate chip.
Okay, sorry.
I had to like really like evaluate and really learn about like the points in the FICO score, like what contributes to your FICO score. So for me, it was learning about that. And then as far though, but yeah, I agree. For credit cards to start you off, because if you want to try to establish some credit, you need credit to establish credit. Capital One is good, and Discover Card.
Oh yeah,
especially if you are a student. Student Discover cards are good, and they usually have a low APR. But just a Discover card in general, they have like so many different Discover cards.
And you get a lot of good points back with Discover. They got a good ratio when it comes to like giving your points back.
I use my Discover points on Amazon all the time. So I would do those two. But as far as like other tips, yeah, so understanding like what all goes into your FICO score. So
your FICO score is a calculation that lenders use based off of the information on your credit report to determine your credit worthiness and if they want to approve you.
like what I did is like, okay, like I said, I started getting credit cards and I just was using them, not paying them back. Or paying the minimum and not realizing I'm collecting all these interest to the point that now I'm paying my payments late and it's just killing my credit score. So the first thing that I did to get my credit in check is I paid all my credit cards off. I didn't close them because at first I'm like, pay them off and close them. I didn't close all of them.
Never close your accounts, because if you close them, is how it counts on your credit. If you have a certain amount of accounts on your credit, it's a good thing if they're paid off and if you're doing what you're supposed to do with your credit. Now, if you begin to close them, it gives you a minimum amount of how many credits you have open. So that means financial institutions haven't had the chance to trust you yet. So that means your credit score won't go up yet.
It basically lowers your credit history. It reduces your credit history.
There you go.
So they'll be like, okay, well, this person doesn't have enough established history for us to see a true pattern of their payment history, their payment pattern. So I paid them all off, but I didn't close them. The other thing too is like, again, like with the FICO score, you have to understand a late payment is detrimental. So a late payment could knock your FICO score down by 60 points, sometimes 100, just in that one late payment. It does not matter if you paid everything on time. That one late payment could knock you down. And the problem is it doesn't equate. So you can have one late payment and that knock you down, but then the next month you pay that on time, it don't pick you right back up.
It don't give
you
you
get like
points
3
back.
points. Right. You don't get your points back. So it's like understanding that. It's like understanding, again, like how she was saying, debt to income ratio. So whatever type of revolving credit you have, any type of credit, you always want to keep your credit balance under 30%. My rule of thumb is under 10. So any of my credit balances, anything that's out there that's existing credit, installment, revolving, whatever, everything is under 10%. So my overall debt to income ratio is under 10%. What banks look for, I think, is 30%.
Yes.
Right?
The reason why it's 30% is because it's only 1/3 of your income. So if you're bringing in, let's say, $3,000 a month, 1/3 of that is only $1,000. So you can use that $1,000 to pay your credit cards off if you need to be. It shouldn't be more than 30%.
Right. They want to make sure that you're able to pay off the credit that it's a bank. So they're looking at, are you going to be able to pay us back? Like how high of a risk are you? The higher your debt to income ratio is, it's going to lower your FICO score because they're looking at it like, okay, this person has way too much outstanding debt.
Debt to income ratio is your monthly expenses divided by your monthly income.
They're too risky for us to give them additional debt because we're not confident that they can pay their current debt that they have. So keep that under 30% because that will hurt your credit score also, like really bad. Just your debt to income ratio. Then you want to keep just your overall balances low on your credit card. If you have $1,000 credit card and you have a $900 balance on that credit card, that's going to lower your credit score.
It is. That's why they say 30%. No more than 30%.
So you want to keep your overall debt to income ratio low, and you want to keep your individual credit cards low. The other thing that I did, because people always ask me like, well, once you get into debt, how did you pay your debt off? So this is what I did that was very important. I took like all my credit cards and I looked at all their annual percentage rates, because some of credit cards annual percentage rates are higher than others, especially when you're younger. When you first get your credit cards, they kind of like they kind of like prey on you a little bit. So the first thing that I did is I took all of my credit cards and I went and I logged in to my accounts and I got what all of their APRs was.
Your APR, or annual percentage rate, is your interest rate plus any additional fees you can expect to pay annually based off of your credit balance. Your APR rate may be different than your interest rate.
So I started paying off according to who had the highest APR. So the reason why I did that, because if you have a higher APR, they're charging you so
More
much interest. So I started paying those off first. So what I would do is I would always pay extra on the ones with the lower APR, but the ones with the higher APR, I wanted to get them out the way. Also, another thing that I did that actually really helped me is that it's a lot of credit cards that's out there. Depending on how your credit is, they'll give you like a 0 introductory APR for like a year or 18 months if you pay it off. And then you can do balance transfers.
First, yeah.
So that's what I did too. So say if I had like a American Express card that had a high APR, but now I got this new credit card that had a 0% introductory APR for 12 months, I did a balance transfer over from my American Express to my new credit card. Say it's a Chase. I think Chase actually did give me a 0% credit card. So I did a balance transfer, and so now your high APR credit card is 0. It's paid off, and now that balance, you still got to pay it, but now you're paying that balance under a credit card with 0 interest.
APR.
So you're paying straight what you owe and not gaining interest, and you just got to make sure you pay it off in a year.
Yep.
So it took me probably like 7 or 8 months just consistently paying, budgeting or whatever, and then I ended up paying everything off. That was my lesson. I learned it, and I'm like, you ain't never have to worry about me again. Now I only use my credit card. It has to be like a true emergency, or I'm using my credit card to get my points, and then as soon as I get home or whatever, I'm about to log in and pay that credit card.
Yeah, that's what I did to build my credit even higher than what it was at the beginning. So what I did was, for my credit cards, I signed up for automatic payments for like certain things like my phone bill, the electricity bill, the gas bill. And then as soon as I paid it with that credit card, I would literally take my debit card and pay that off right away. So if you're doing that, you're building credit, but you're also paying it off right away. So it looks like you're making a payment, but you already have the money to spare to pay that off. Another thing for me, how I did it was learning to live under my means. So
I do that all the time.
I be seeing people, if you only bring in $3,000, there's no reason why you should be spending that total amount of $3,000 a month.
Let me tell you this real quick, and I don't want to get too far off the subject. Oh my God, this reminded me of something. Living below your means. So I've had people say, which I hear somebody say, somebody told me this or whatever. Because who is that somebody that told you, and why did they feel comfortable telling you? But anyways, so I had like a couple of people tell me, like, oh, such and such said Tabitha make all of this money, but why she don't buy this
car,
or why she wear that, or why she don't have this car? Because I live below my means. Like, because I want to have, first of all, I'm not spending money that's going to depreciate. I'm not wasting my money on something that's going to depreciate,
over time.
Right, like a week later it depreciated, and that's not where my goal is or whatever. And when you live below your means, you don't got to worry about living paycheck to paycheck. So that's why I live below my means. And furthermore, don't be worried about what to buy.
Mind your business. Please join Mind My Business, okay?
But anyways, go back. Sorry.
Okay. So live below your means. One thing that I did to pay off my credit card when I got myself on that debt, it was a little quicker. One thing I did was 1/3. So what I mean by that is like food, rent, electricity. That's only 1/3 of my income. It should only be 1/3 of my income. My credit cards and everything, that was another third of my income. And then that other third of my income went to savings. So that's what I do to make sure that I'm able to pay off any bills that come in, and then also collect the savings and make sure all my regular bills are paid. That's just a little quick tip. Make sure you only live in 1/3 of your means.
Yep. And another quick tip is pay yourself first.
I love that.
Yes.
Mhm.
Pay yourself. Like, I tell people that all the time. If you pay yourself first, you always gonna have money in your savings account, and it's gonna become embedded in your brain. It's just almost like a bill, so you're not gonna miss it.
Yeah.
So just like when you're sitting down, and I have a budget. I do my budget every month. When you're sitting down with your budget, you're like, okay, I gotta pay the light bill, gotta pay the car note, I gotta pay insurance, da da da. It should be a part of your budget that says pay myself, and you pay yourself that every time you get paid, every paycheck. And to make it even better, which now most companies or whatever, you can have multiple bank accounts as your direct deposit.
I was
Have
just
it
about to
come.
say that.
That's what I do.
That's
have
what
it
I
come
do.
straight out. You don't even miss it because it never got deposited into your main account anyways. And the next thing you know, you're looking at your savings account and you like, man, I got like $6,000 in here. Where this come from? And then if you're using your savings account for a true savings, try to get a savings account that sometimes they have like interest earned savings accounts. If you can find one of those or whatever, and you're not taking money out, it's just strictly for savings or whatever, then that's another way that you can gain a small amount of interest on the money that you put in your savings. But yes,
Credit
good tip.
unions are pretty good
Yes.
with those. Credit unions
Pay
pretty-
yourself first.
Yeah, credit unions pretty give you are really good at giving you a good amount on your savings accounts. So look into your local credit unions. But yeah, pay yourself first. And I always do it, like you said, in a different bank account. I have multiple bank accounts, and that's the only way that I'm like able to save with no problem. If it's in multiple bank accounts, I'm not even gonna look at that bank account. That bank account don't matter until like I absolutely need it. So if you do that, that's how you save money. Because sometimes if it's all together in one account, you know, you can overspend one day and here they go transferring money from your savings into your
Right.
regular account. And now you overspending more money than what you need to. So for top credits, like we said, top credit cards to use. I said Capital One, and you said.
I said Capital One and Discover Card.
And also look into your local credit unions. They do really good with credit cards as well.
And then just to recap, quick credit tips if you're trying to like get your credit built up. Again, if you do take out those credit cards, you do have to use the credit cards. You want to pay them back right away because now you're showing that you're using it and you're paying. So you're establishing payment history. You want to keep your debt to income ratio below 30%. And just get in the habit of keeping even though debt to income is your total debt to income, get in the habit of keeping every individual credit card below 30% as well. Pay your credit cards on time. Pay them before the due date because then you can also benefit from maybe not getting that interest on the credit card if you pay it in full before the due date.
Yeah, if you paid let's say your credit card payment was due on the 5th. If you made that payment on the 1st and then a payment prior to that, it used to count as 2 payments. But I believe they changed that.
That brings me to another thing too. So another tip too. So we have make sure your debt to income ratio is low. If you take out credit cards, got to use them, but you got to pay them back on time to make sure that you're establishing a history of paying your payments. You want to keep your credit cards or any type of credit out for a long time because you want to establish a long history.
Credit history.
Banks need to be able to look at your credit history. And if you only have like a 6-month history or a year history, then you closing that card down, it doesn't really give them a lot to go by. The other thing too is all these credit cards that we mentioned, Capital One, Discover. I mean, you may have your own personal that may be, Chase, Bank of America, whatever. They all offer some type of credit monitoring program. Sign up for that program. They'll give you monthly updates. Capital One actually gives me weekly updates.
Yeah.
They'll give you monthly updates on your FICO score. They'll give you updates if there's a ding on your credit, if somebody ran your credit, if they feel like, I think even Capital One with the credit wise, if any of your personal information maybe came up on another website, it'll ding. That's so important because then you stay on top of your credit. So you can see and it helps you stay on top of what is my debt to income ratio?
And then I know a lot of us have Credit Karma and they give you like your free credit report, but your FICO score is the one that Credit Karma does not have. So Capital One has that for you where you can actually check that weekly.
That's another thing too. The FICO score on Credit Karma is a different type of FICO score. So you may get several different FICO scores or whatever, depending on what type of I think calculations that they use or whatever. I think on Credit Karma is your Vantage score is what they use. So you don't necessarily have to go by that or whatever because sometimes in the past people have said, I thought I was doing good based off of Credit Karma. So you may not want to use the score that they give you, but like Jackie said, the good thing is you get your full credit report. Credit Karma is free. You just sign up. they run your stuff like right away. That's
And
another good tool.
It has your actual everything on there that you have.
And look
but
at
it
your
just
actual
doesn't,
credit report.
Yeah, it just doesn't have the right numbers. Typically, it's much higher. Well, not much higher, but a few points typically higher than your actual FICO score. So you just have to look at only your credit report and maybe not the numbers. You can like kind of go off the numbers, but don't be like, oh, my credit score 800. Sis, it's still 720 on that one, which is good. Which is good, but
it's just so important. I'm telling y'all, if nobody has ever talked to you about credit and you never understood like what's the importance of credit, it's something about being able to I can walk into a car dealership, and I'm not even trying to like brag or boast. I can walk into a car dealership and just pick out the car I want. Like, I ain't worried, like, dang, am I gonna get approved? I already know that I'm gonna get approved because I know my credit is good. I did my due diligence. I put in the work to get my credit to where it needs to be. A house. Like, I'm looking for a new house right now. It's like, boom, like, I already know, like, all right, I'm about to, like, get this house.
For this, boom.
Right, because I already know what my credit is. And what I like about it is that I don't know if it's because how I look. I don't want to throw race in it or whatever.
Me too.
But it feels so good because when you walk into like a place or whatever, a bank, I think they like be kind of like already stereotyping and
they
thinking
do.
like, oh, your credit ain't gonna be run it. I be waiting.
And you know what? I hate to say this, but I used to work in financial institutions, and I will be honest. I worked in one of the area with the least amount of black people in Lake County. And I would see, like, I remember this one guy came in, and he was a black guy. He came in, and he had on, like, I guess you would say what they said, urban clothes. That's exactly what they said. And he wanted to apply for a credit card. And they was like, no, like, you know, maybe you should do this, and this, and this, give him other routes, tell him to go to other financial institutions too. And then I was like, come in here, come in my office. Ran his thing. Y'all, this man had an 806 credit score. Okay? And they just denied that man. That man walked out with a credit card with $20,000, a limit of $20K.
But it's just something to
Credit
be said.
is freedom.
Yes.
Credit
is
is
freedom. That's a good way. That's a good way to put it. It's just something to be said when you can just don't have to worry about it. And you don't have to worry about them getting over on you. Because I know a lot of people have been in that situation where, say you need a new car and you go get this car, but your credit is messed up. So
you got a 32.99 APR.
All this interest. They charge you $500 for like a 2010, you know, whatever,
and
Nissan, whatever.
Large monthly payments, and you thinking you the shit because you can pay these large monthly payments off. But at the end of the day, they just ran game on you.
And it's like, don't do that. Like, if you get your credit up and have good credit, like, you're going to be able to make half that payment. Like, credit is so important. Credit is so important. Don't let nobody tell you don't worry about it. Don't let...
I got cash. Don't get cash. You going to need your credit one day. Like, I tell people all the time, like...
Wait. Unless you got enough cash to pay in full.
Okay,
I will say that's better than credit.
It is. Like he was saying, like, it feels good to get offers in the mail and be like, I ain't about to take this offer and rip it up. Like, I love doing that. Like, it feels sometimes, I feel good about that. Like, that people are sending me out offers because they see what my credit score is looking like, and I can deny the offer right away.
Like, it just feels good. I'm telling you, like, I'm like, all right, I'm looking for a house or whatever. And just to be like they, you know, they'll say like, okay, well, you need to get a pre-approval letter. Usually they want you to get a pre-approval letter before they even really start doing the realtor before they really start looking for you, because they want to make sure you ain't wasting their time. And just to be like, oh, I can get that for you about 20 minutes. Let me call my bank real quick. Because you already know, like, it's just, guys, credit is so important. I've been in the position where my credit sucked and you're getting denied. No. And
then they go to hard inquiries on your credit because you did
that don't feel good. Or you coming back and they coming with some bogus APR rate. It don't feel good. Like, I learned my lesson, and so I just try to share with everybody. Like I'm telling you, like I tell people,
free
all the
tips.
Time, it's free tips. Like, and you get your credit score up to like 750, 760, 800. no problem.
Problem.
You get anything probably over like you said, a 720, anything over like 750, you get in the 800s.
It's
You can
literally
just get stuff. You can just get stuff.
literally just signing your name on the dotted line.
Yeah.
You can get something
Yeah.
without like even like going to like a car dealership. You ain't gotta put no money down. You literally just signing off on the dotted line. They
Yeah.
telling you how much your monthly payment's about to be.
Yep. I'm telling you. So take them tips. Take them tips.
Mm-hmm.
Use those tips. Like, comment, subscribe. Let us know. Like,
If
hey,
you guys want us to do
yeah.
like this, like weekly, we can do like Finance Fridays where we give you like tips on finances every Friday. Even if it's like a short minute clip, just let us know what you guys want. And
budgeting.
Mhm, budgeting.
Budgeting is like my
That's my
Bible.
thing. I be telling people you need a budget.
I do too.
I be like, I got you.
Yes.
I got you. This is what we gonna do. This is how we gonna set it up. This is what you got to pay off. Mm-hmm.
Especially when it's somebody, I'm like, you make good money. So I know it's not the money that you make. It's something
just
to do
what you
with your
doing.
spending habits.
Mm-hmm.
Let me look at your stuff. So
I got you.
Yeah.
Mm-hmm.